Hey, Tanya Taylor here of Grow Your Wealth. And this week I'm coming to you live to talk about the stock market because there has been a lot of volatility in the stock market. And so there's also a lot of misinformation going around. And I wanted to just talk to you about, well, how do you go about investing in the stock market? For those of you who don't know me, Tanya Taylor of Grow Your Wealth. And I teach professionals and small business owners how to ditch bad debt and create their very own 6 or 7 figure retirement income. So I was having a conversation with someone this weekend, and they said to me, my friend told me that Google and Amazon went down and it's like under $100. And as I was listening more to this person and what they were saying, I realized that they thought that these stocks, which were around 3,000, Amazon actually was at some point over 3,500, and Google was up to 3,000, I think even over $3,000. And as I listened, I realized that they were thinking that the stock went down from $3,000 to under $100. And so I had to correct them about it because there's a lot that happened in between. And no, these stocks did not plummet from $3,000 to $100. That would be such major news across the airways. It would just be like so much about it would be just incredible. And as I said to her, if that did happen, I would have gone out and wherever I could get $1 million to borrow, I would go try to get that $1 million to borrow to invest in those companies. So I want to talk about 5 things that you need to think about if you are going to be investing in the stock market, because a lot of times people listen to others and they don't really understand the whole idea around investing in the stock market, what it entails, and what are some of the things that you should be thinking about. So the 5 things that I'm going to talk about are just things that even before you start investing, you need to keep in mind. And if you've been following me for a while, you know that I talk about these things. Now, if you're joining me live, I would love for you to put live in the chat below. If you're joining from the replay, let me know if you're on the replay as well. And if you're finding this information informative, please, I would love to know. I'd also love to know what else you want to know about. Now, this is being broadcast live on YouTube as well. So if you're watching from YouTube, let me know. If you're not a subscriber, subscribe to my channel. It will help the algorithm to let others be able to watch this video as well. All right, now let's talk about the first thing that if you are going to invest in the stock market, you want to make sure that you're doing. And it is that you are using money that you are not going to need right away. And the reason for that is the way that I teach people about investing in the stock market is that they should be investing for the long term. So if you know that you have an emergency fund that you've put together, you definitely do not want to take that money and put in the stock market. I always say that if you're going to invest in the stock market, it should be over a period of at least 3 to 5 years, even longer. But you should not be looking to immediately put your money in and then in a very short period of time to take your money out. It's not going to serve the purpose of why you are investing. The second thing that you want to make sure that you do is you want to get the facts for yourself so that you're able to think for yourself. And the only way that you're going to be able to do that is that you take the time to learn what investing in the stock market entails. Because the reality is that if you listen to 5 different people, and I'm talking even people on the television, analysts, reporters, you could hear about one company and all 5 of them will tell you something different. Now, how do you make a decision if you're hearing from 5 different people something completely different about one stock? The only way that you are going to know what to do is if you take the time and learn what is it like to invest? What are some of the things that I should be thinking about when I invest? And then if you know that, you could kind of weed out the stuff that doesn't make sense and focus on the things that do make sense, because I would never tell you to disregard everything or anything that you hear people talk about. But what you want to do is that you want to, if you listen, be able to say, well, that makes sense, or this does not make any sense, or maybe I need to investigate this a little bit more to see if what I am hearing is corresponding with what I know in terms of investing in the stock market. And the only way you can do that is to really take the time and learn. So that's the second thing. And then thirdly, you want to remove emotions from your analysis. That's critical because the stock market, especially for the past year and a half, has pretty much been like this. It's just all over the place, right? So if you invested in a stock, and I'm actually, you know what? I'm going to pull up Google towards the end of this presentation. I'm going to walk you through sort of what are some of the things you were looking at when you look at a stock chart, and why, if you get emotional about investing, you could end up losing a lot of your money. And if you really focus on the facts, so if you learn the facts and you focus on the fundamentals of a company and take your emotion out of it completely, you will see that over the long run, you will have a better return on your investment. Because as I said before, if you are investing for 3 to 5 years or longer, there is going to be peaks and valleys, but over the long term, you are going to see that the return that you're going to get is going to be positive. Now, I wanted to just also caveat that by saying you are not going to always have a positive return on all of your investments. That's the reality. There are good companies out there that the stock price keep going up and up and up, and you will over time always get a positive return. But you may have a couple companies that you buy, and when you did the fundamentals, it seemed like they're a great company to own, but they just don't perform as well as you would have liked them to. And that's why I'll go to number 4, which is like you reevaluate your portfolio periodically. And there are times that it's going to make sense to sell a company, because if you were owning that company and something happens, let's say in the industry for that company, and the company is no longer performing, and in the long run, it doesn't seem like the company is going to be performing well, then it's time to part with the company. And it goes back to not putting your emotion in it, right? Because if you're looking at the fundamentals now and you're like, oof, this company, there's a lot going on. It's long term, it doesn't look positive. It doesn't make sense to hold on to it. So keep that in mind as well, that you're not going to always have a portfolio filled with great performers. I wish I could tell you that that's the case, but having been an investor for almost 25 years now, I always have stocks in my portfolio that doesn't always perform as much as I want them to. And I take time and I evaluate whether or not I want to get rid of some of those stocks. And sometimes I hold on to them even if they haven't performed for a while, because I see based on the fundamentals that there are still things going on that I believe after a couple of years, the stock is going to take off and do really well. And so I'll hold on to that stock. And then there are times when I look at it, I look at the industry, I look at everything that's going on, and it feels to me, based on the data that I'm looking at, that this stock is probably not going to return me as much as I want. So I'm going to sell it. All right. I think that was number 4. And the 5th thing, I touched on it a bit, but I want to talk about it in more detail. And then I'm actually going to pull up a stock chart and I'm going to show you what I mean. And so I talked about, holding on to your investment for 3 to 5 years, preferably longer, and not selling a stock just because the price falls, because there are a lot of factors that cause a stock price to fall. And it could just be that the Federal Reserve talk about increasing interest rate, and the fundamentals of the company hasn't changed, but sometimes just the news out there that there's so much uncertainty. Stock market investors do not like uncertainty. And so whenever there's a lot of uncertainty introduced into the stock market, investors get jittery. And I want you to think about yourself. If you're someone who maybe you're using your Acorn app to invest or your Robinhood app to invest, and you hear that the stock market is gone down, right? a lot of people, they go and they sell. And so we all together make up the individuals that are investing in the stock market. And so if we don't have enough knowledge collectively, we're going to sell. And we sell at the wrong time many times, and we end up buying at the wrong time as well. So if you stick to this belief that I'm going to go with just the fundamentals, I'm going to think for myself and not just listen to the talking heads without evaluating what they're saying. And I'm going to not just automatically sell a stock because the value of the stock went down. And also, if you go in saying, I am going to invest for the long term, not take my emergency fund or some cash that I have now to try to get in and get rich and get out, because that's where a lot of people get burned. If you take all of those together and you just say, you know what, I'm going to buckle down. I'm going to really learn how to invest. I'm going to look at the fundamentals of the company and learn what those are that I should be focused on. And I'm going to invest for the long term. You will see growth in your portfolio. When I started investing 20 something years ago, I had my investment club, which I was running that investment club, and I knew all the research that I needed to do. And we were investing in fine companies, and the portfolio was slowly growing. It wasn't a get rich quick. And then I got greedy. I'm going to be honest. I had just started learning to invest, and there was a lot of stocks. It was a .com era, for those of you who remember way back then. And so I listened to a lot of stock tips, right? And there was this whole group that I had. It's kind of embarrassing now because I never really told my partners I was doing this. It was like I wanted to get rich. And so I invested in all these companies, and they had no fundamental. And at the end of the day, I lost a lot of money investing in these companies, even though I knew better because I was running an investment club. We had all of the protocols to invest in the right stocks, but here I was trying to be greedy. And so I got really burnt. And it was a lesson that I really took to heart and learned from, and that, you know, it's better to invest in quality companies, take my time and watch them grow, instead of investing in like these fly-by-night companies that we think are going to go up, up, up. Because what happens is they do go up, up, up. And if we get, especially if we get extra greedy, they come plummeting down and we lose all of our money. So the very first stock that I invested in in my personal account after I lost a lot of money was Apple. And, you know, I did research on Apple, and Apple has returned me to date over 175K. So it's been a long time since I've invested in it, but still, like, for the amount that I invested in it and how much I've gotten back over the past number of years, it just shows that if you take your time and you do the research and you don't listen to voices telling you things. Oh, I don't mean to make it sound crazy, but if you don't listen to people just telling you, like, oh, the stock crashed, or the stock this, or buy this, sell this. But if you take the time and you learn, then you will see that over time you will get the results. And that's what I teach my clients too. Just take the time, just learn. I actually do not tell my clients ever like what stocks to buy. I just give them the information. And if they're diligent about doing their research, they will have a well-rounded portfolio. We do talk about, you know, like whether or not a stock makes sense. And we go into detail and are going into more details, you know, just about what are the fundamentals that you should be looking at. And when should you decide that, you know what, I don't know if I should buy this stock because I don't like X, Y, and Z about it, or I think there's still a possibility to have this stock provide me with great returns because of these reasons. So those are some of the things that we delve into when I analyze stocks with my clients. So I did promise that I wanted to go to one stock, which is Google, since that's one of the stock that was brought up to me, and show you why. Like, if you just listen to someone, it sort of skews what reality is. So I'm going to go to Google stock. I'm going to bring it up shortly. I'm just pulling it up here. So let me see if I could share here. Bear with me a minute. I'm trying to share screen and I realized that I actually don't really know how to share screen here. So let's see. Google. Let's see if I figured it out. So I think I figured out how to, yes, here's my screen and here is Google stock. And what the person said to me was that Google stock fell from, I think, like the $3,000 high to this. But in reality, that's not what happened. What really happened is, I'm hoping that you guys can still see this. Let me see here. Yeah, you can still see this. So the first thing that happened with Google is that I'm trying to see what month, I think July. In July of 2022, Google had what's called a stock split, 20 for 1. So if Google stock was worth $3,000 at the time and it had a 20 for 1 stock split, it means that instead of the price being $3,000, if I owned 1 share of Google, I now owned 20 shares of Google. And the price of my stock is $150, not $3,000 anymore. So if I had bought the stock back, then I would have paid about $150 for it. That was in July. But let's say I had purchased the stock at a much earlier time, maybe in 2020, when the stock market, it crashed and then it went back up. So if I had purchased that stock in 2020, I would have only paid $55 for the stock. So even though Google stock has fallen in the past year, I would not have lost any money because I paid $55 per share for the stock in 2020, but right now it's worth $99. So I would have actually almost doubled my money. But in reality, though, if I had purchased the stock in 2022, because I want to show the positives and I want to show like the downsides as well. So if I had purchased this anytime, let's go back here. If I had purchased this anytime before around what month? January 2022? No. Yeah, if I had purchased this anytime before February 2021, where it's about $105. So let's go a little further down, where it's $87. So if I purchased it anytime before December 31, 2020, I would not have a loss in the stock, even though the stock prices had gone down. However, if I purchased the stock here in November 2021, you see it says I bought it at $149. So that means if I bought it at $149 and it's now $99, I would have a loss on that stock today because I bought it for, let's round it to $150 and now it's $100. So I would have lost $50 on each share. But remember, I told you that you need to hold this stock long term. So November 2021 till now is only a year and a half. You would not want to go out and sell this stock unless something happened with Google where it's like this, maybe let's say another company came around and it's like it's going to trump Google. Google will not remain competitive anymore. So I'm going to sell Google stock. Then you could say after a year and a half, oh, Google is just not going to do well anymore. I'm going to sell it. But in this case, the stock market has been very, very volatile. Any little news causes a stock to drop. So you don't want to go on emotion now and say, I'm going to sell Google because I'm down $50, because your goal is to hold the stock long term. And if Google stock goes up, even in the next 5 months, back to this price of $149, you'd be paying capital gain taxes on this, and you would lose out on the value of the stock because you have listened to what others said and you have put your emotions into it without taking the time to just look at the fundamentals. So you'd want to go back to look to see, has there been a lot of changes in Google since I bought the stock that would cause me to now want to sell it? And if the answer is no, then you would just want to hold on to the stock and ride it back up. Now, there are other techniques that you can use as an investor where if the stock price goes down, you could you could actually sell it when it gets to a certain price, depending on your risk tolerance and depending on what kind of account you have the stock in. But generally speaking, if you're a long-term investor and you know that you've invested in a great company, the impetus shouldn't be, oh my God, the stock dropped, so I'm going to sell it. And I think it's also really important to understand that people who do not understand the stock market, this was a typical example of misinformation where someone is saying to me, hey, Google stock has dropped from $3,000 to $100, when in fact that's so far from the truth. Google stock dropped from about $150, depending on when you purchased it, to $99, but it never dropped that much. And that's why it's really important that you understand this. And I know some people, they just use Robinhood, or they maybe use Stash or whatever the app is, and they're probably just putting a little here and there, but they also still don't understand like why they're buying certain investments. It's always good to just learn so you have that knowledge, so that you know if you're buying the right company and you know if you could hold this company long term. So I hope that you guys found this helpful. Just a couple other things, since I'm on the stock chart, I might as well share a couple other things. If you want to see how Google has performed for the entirety of the time that it's been public, for some reason they're not showing it now, but usually they'll show you the performance from the time Google went public, which means the time that we've been able to buy the stock. But if you go to 5 years, you see how it's performed over 5 years. So you see how I told you that you want to hold a stock for 5 years or more? If you bought Google 5 years ago, the price would have been around $58. And right now it's $99. So you would have had a gain over that 5-year period. You would not have had a loss. The only time you would have had a loss on paper, because if you don't sell the stock, you don't have a real loss. You have what's called an unrealized loss. The only time you'd have a real loss is the only time you'd have a loss is if you bought it anywhere during this time frame. But if you bought it during this time frame, it's not even 2 years yet. So you would not want to sell it because you'd done your research and you felt that Google was a good company. So a couple other things about the stock chart is the price where it says open, it just tells you when the day start, what the price was for Google, and then how high it got to during the day and what was the lowest price during the day. And these are other ratios that we use and we analyze. This one, not so. We don't really analyze this one, but we'll use this as part of our analysis. If you want to see how the stock performed over the past 52 weeks, the lowest that it went to was $83 and the highest that it was $152. So those are just some of the things that you can glean from this, just looking at this chart. And then you can look at how it performed for 1 day, for 5 days, for a month, for 6 months, year to date, and then over the past year, over the past 5 years, depending on what search engine that you use or what website, sometimes you're able to see even more data than that. All right, so that's all I wanted to share today. And I just want to remind you that even though we are in volatile times in the stock market, it's still a good time to get into the stock market. There's never a terrible time to get in the stock market because there's always good buys out there. And if you're looking to invest for the long term, you will find that your portfolio is going to grow long term once you invest in great companies. And that's what I teach my clients how to do. So if you are interested in learning how to invest in the stock market, or if you're just interested in learning how to ditch bad debt and create your 6 or 7-figure retirement, learning how money works, learning how to invest, learning how to protect your wealth, reach out to me, send me a DM, let's chat, and we could have you join the community so that you could learn and grow as well. I'll see you guys soon.